In this video, I'm going to be talking through the best stocks and shares ISAs of 2024. Now, the thing is, there is no one answer for everybody. So any video that you watch where they tell you this is the best stocks and shares ISA, I think doing a slight disservice, because the thing you've got to bear in mind is that for different people, different stocks and shares ISAs will be better than others. So you've got to take into a whole range of factors, and they include things like fees and charges. Of course, they are among the most important, but there are things like customer service, the performance of a portfolio if you're buying a managed ISA, although that is no guarantee of future returns. There is, of course, the investment options that exist. Do they offer things like other products like ISAs, for example? Do they offer a managed ISA if that's what you're after? Do they offer an app? So there are plenty of people that want an app to be able to run their money. There are plenty of platforms that don't have an app, or if they do, the app is pretty basic and you can only use it as a read-only type of service. Do they give any decent interest on cash? So do they pay you, for example, if you have uninvested cash sitting on their platform, do they give you any interest? And if so, how much? There's a big disparity, and I'm going to come on to that later. Also, there may be additional features and tools, and the range of investments in terms of ETFs, maybe US shares, maybe it's just you're after unit trusts. What type of investments do the platforms offer? There's a whole range of things that go into that melting pot that mean that one stocks and shares ISA is not best for everybody. And at the end of the video, I'll go and explain why you don't have to just pick one. And it's a very important point. So what I'm going to do is put a load of links in the notes of this video that go through to the Money to the Masses website that do a whole range of comparisons. There are reviews of every product that I mentioned in this video. You can find an in-depth review analysis of the products, the services, costs. So make sure you go through to those. But also there are versus articles where we compare platforms, stocks and shares ISAs side by side. So you can see whether, for example, Vanguard might be more cost effective than using Interactive Investor if you're investing in Vanguard funds, for example. I'll give you a clue. Actually, it's not universally. So there's a certain point where Interactive Investor gets cheaper, but I'm kind of getting ahead of myself there. So what I'm going to do is start off with different scenarios in terms of maybe the best managed ISA, the best ISA if you want just to buy and hold, the best ISA if you want to maybe trade shares. So maybe you want to buy and sell US shares. I'm going to also talk about the best ISAs for those who have uninvested cash. So I'm going to cover a whole range of those, and I'm going to go through each in detail. Do pause the video. If you find it useful, hit that like button, but also subscribe to the channel. So I'm going to start obviously with the caveat that obviously if you're investing, your capital is at risk, so do bear that in mind. And really, stocks and shares ISAs are only really of use to you, or should be used, if you are investing for at least 5 years. If you're not, and you want access to the money before that, then you should be really looking at a cash ISA. One thing, if you're just interested in costs, I'm going to just show you a quick article on the Money to the Masses website, the cheapest stocks and shares ISAs in 2024. We do pull out our top picks, but I'm going to jump straight down, because if you're only interested in cost, we do look at the costs and compare them for all the different platforms out there. For if you're investing in unit trust, for example, or in this example, the table, if you're looking for managed portfolios based on different portfolio size. But if you are looking for maybe investing in a platform where you hold unit trusts, we also compare that. And also if you just want to hold investment trusts and ETFs, of course, we've had to use certain assumptions in there, but you can pause the video, but I suggest you go through to the links in the notes of this video, because we do update these all the time. And actually the platforms regularly are changing their charging structures because it's becoming so competitive. But I'm going to give you some highlights of the best platforms out there. So if we're talking about managed portfolios, these are for people who don't want to run their own money. They just want to focus on investing money, contributing to a stocks and shares ISA, and somebody else doing the running selection of the investments for them. So there are three, what they would used to call, I suppose, robo-advisors, but think of them as managed ISAs out there that probably stand out. And they are, first of all, Wealthify. So if you've got £50,000 or less, then they may be of interest. So firstly, they only offer managed portfolios, and there's 5 risk-rated portfolios that they have. They do ethical versions, so those are versions of the main portfolios, which are obviously having a range of risk, but they have a more socially responsible tilt to them. You can invest from as little as £1, which is quite attractive for new investors. This is very low. So Nutmeg and Money Farm, which are competitors in this space, you have to have at least £500 as a minimum investment if you wanted to start investing with them. So an attraction of Wealthify is that charging structure is very simple. Now, When you have a platform, so we're talking about stocks and shares ISA, that platform that runs it will charge a fee, which is called a management fee or annual management fee. It's 0.6% across the board, irrespective of portfolio size when you're looking at Wealthify. Usually things are tiered in different platforms. This one has a very simple charging structure. There's always an underlying investment charge. So that's the underlying ETF or fund that you buy with, well, that's regardless of whatever platform you choose. So it is one of the cheapest ways to invest if you're starting out, particularly if you have less than £50,000 in your portfolio. Now, those portfolios that they do offer are managed, which means that they can change the asset mix, so what assets they invest in, whether it be UK equities, European equities, or whatever assets that they choose. They don't offer simple fixed allocation models, so those are static, and they often are much cheaper when providers provide those. So if you want something like that, then you might be wanting to look at someone like Money Farm. Those fixed allocation models where the allocation is static, they are relatively cheap. They charge between 0.25 and 0.45 for the annual management fee. Again, there's always an underlying charge, which is obviously relatively small, but there is a charge for underlying investments. That's the same across the board of any platform. The fully managed portfolio is a little bit more expensive, 0.35% a year to 0.75%. One thing that I would say about Money Farm, which I do quite like, is that the more you invest, they actually can get cheaper. So by that, I mean that normally with a tiered structure, so if you invest a small money with a platform, the part that may be above £50,000 may be charged at a lower rate than the stuff below that. But with Money Farm, once you go across those tiers, everything gets charged at the new reduced rate. That is slightly different, and I do quite like it. Now, Money Farm also offers something called thematic investing, where that is a portfolio, but it has a tilt to a theme. Now, they have a number of themes. One of them includes exposure to AI, so artificial intelligence. That will be attractive to some people. So these are quite interesting for people who don't want to run their own money. They just want to concentrate on putting money into their stocks and shares ISA, but they want it maybe managed by somebody else, so they can do that, but they may have a view where they may say, I want exposure to AI. They might think that's the future. So you can do that with Money Farm. They also have just started to introduce a limited range of stocks and bonds and ETFs and mutual funds that you can buy, but that isn't really their forte. Moving on to Nutmeg. Now, Nutmeg are a provider that have a much wider range of portfolios. So these portfolio ranges have grown over time. They've got 10 risk-rated portfolios, which is the largest range of the three providers I've already mentioned in this section. They also have other managed types of ISAs. You can have ethical ISAs. They have a range of ISAs that are provided by JP Morgan Asset Management called Smart Alpha Portfolios. Do check the review that we linked to. It gives you all the details about the different portfolios that you can have. They also offer a lifetime ISA. I know I'm talking about stocks and shares ISAs, but you just need to bear in mind that if you want all your investments in one place, then you might want to look at what else platforms offer. So do they offer a pension, for example, or a lifetime ISA? But that is down to you. Now, like Money Farm and Nutmeg, they do allow you to invest in those socially responsible portfolios. And Nutmeg also offers thematic investing, a bit like Money Farm does. So you can, for example, have a technological innovation tilt to a portfolio, or something that's to do with the evolving consumer. Again, links in the notes, you can go to and look at that at your own time. Now, of course, talking about managed ISA portfolios wouldn't be complete if we didn't mention performance. Now, you should never pick something just based on performance, because past performance is no guide to future returns. But we have actually done the analysis on the best performing ISAs out there, the managed ones. And we've looked at a range of them, and you can see the details here. We've looked at some of the mid-range portfolios and a number of the ones I've mentioned: Money Farm, Wealthify, Nutmeg, for example, the Vanguard life strategy funds that are also out there, and we've compared them. So we do update these regularly. You can see them on screen. We look at the performance in each year of the last 5, because the good news is that now many of them have a history of performance. Vanguard have actually launched a managed ISA. It's different to the Vanguard Life Strategy funds. I've actually been shown the portfolio of the managed ISA versus the life strategy funds. I can confirm they are different, but of course there is no history that you can really go back and look at in the new service, but that is your choice and up to you. We do compare them, we do update this regularly, so make sure you click through to that article if you are interested. But as I say, there's not a reason just to pick something based on performance, because there's no guide to the future returns that you will get. Now, moving on to the cheapest, if you just want to buy and hold a portfolio of funds that you choose yourself. So you're not having a managed portfolio, you're choosing what you want. Now, the thing is, which is cheapest depends on what you want to hold. Now, a section on buy and hold wouldn't be complete without a mention of Vanguard. So Vanguard is pretty much the darling of the internet when it comes to investing. Now, they have a range of ETFs. They have the life strategy funds, which are incredibly popular. They're a diversified portfolio of equity and bonds. They're globally diversified. Now, they have a platform called Vanguard Investor through which you can buy all of these different investments. The one drawback is that you can only buy Vanguard funds. That might not be a problem for you. And also, they don't have an app at the moment. That is meant to be coming in the future, but if you really want one now, then you might have to wait a bit. Now, the positive with Vanguard Investors, of course, it is very cost effective. They only charge 0.15% as a platform fee that's capped at £375 a year. Of course, as always, you've got to pay the underlying charge of the funds that you invest in, but again, they are very cost effective. So Vanguard Investor is one to look at. Now, the one thing I will point out, though, that if you are a Vanguard fan and you maybe love the Vanguard Life Strategy funds, there can be a cheaper way to hold those if you're not planning on buying and selling. So if you go with Interactive Investor, so II, then we'll put a link again in the notes. They are cheaper to buy and invest and hold Vanguard Life Strategy funds, for example, if you have over £96,000 in your ISA portfolio. So the more you have, the cheaper it actually becomes because of their fixed fee. Now, there is a bit of a weird quirk with their charging there. There is a sweet spot between 48,000 and 50,000 where they can be cheaper than Vanguard Investor as well. I'm not going to get into that. Rule of thumb, above £96,000, then II starts to come into play, even if you have a slight obsession with Vanguard funds. Now, going on to Interactive Investor or II, they are an attractive proposition for people who are wanting to buy and hold because they have a fixed fee model, which means they charge a monthly amount, typically $4.99 or $11.99, depending on the amount that you have to invest. They have a wide range of investments, ETFs, investment trusts, unit trusts, shares. So they are an incredibly popular platform. As I say, the more you have, the more cost effective they are because they don't charge a percentage fee of your portfolio as a administration charge. They actually just charge that fixed fee. One thing to point out, that fee does come out of your bank account separately, so bear that in mind. We can't not mention AJ Bell in this because AJ Bell, if you're not buying and selling, a bit like Interactive Investor, where they charge for you to buy and sell shares, for example, they are very cheap if you don't, and they have a fee, an annual charge of 0.25%, which reduces to 0.1% if you have over £250,000, and anything over £500,000, there isn't a charge on that part of the portfolio. So interestingly, while there is a 0.25% fee for holding shares, investment trusts and ETFs, it is capped at £42 a year. The final one I want to mention in this section, and again, this isn't a complete list. There are going to be people who may like other platforms and they can be more cost effective in other scenarios. Interactive brokers won't be well known to quite a few people in the UK. They have a complex charging structure and they aren't I think, in my own personal opinion, the most user-friendly platform out there. But if you want to buy and hold, then they are very cost effective if you want to buy and hold certain things like shares and ETFs. However, they do charge FX fees when buying shares and ETFs, as well as a minimum monthly fee of £3. So they are good value. Now, I'm going to move on now to if you want to have a stocks and shares ISA for trading. So a standout one is Trading 212, and they don't charge a platform fee or a subscription fee, and it offers a wide range of stocks as well as ETFs. Now, it doesn't charge commission, so there's no commission fee for buying and selling shares. However, you will pay a foreign exchange fee of 0.15% when you buy or sell US shares. That actually compares very favourably, say, with free trade, for example. But again, if you're in this world where you like to have things in one place and you want to have a pension, Trading 212 don't offer a pension, but we are talking about stocks and shares ISAs here. If you did want one, something like Trading 212, free trade do offer a pension. Again, you've got to mention Interactive brokers in this section. Yes, it's complex charging structure, but it can be cost effective. There are details in the link to our full review. Now, moving on to cash. Now, okay, if you want to hold cash in an ISA, you are better off a cash ISA. There are better rates out there. But stocks and shares ISAs have started to pay a better rate of return on cash, so better interest. Now, you can get 4.45% from Best Invest, for example. Now, Best Invest have always been one of the leaders in terms of the amount of interest they pay on uninvested cash. Yes, you will probably be looking to invest that money because that's why you've got a stocks and shares ISA, but There's nothing wrong with getting a decent rate of return on the cash when it is uninvested. Now, there is an article on the Money to Masses website. I'm going to just quickly flick across to it. Now, this is it on screen here. Investment platforms paying the highest rate on cash. Now, this is regularly updated. You can see we do heat maps here. I'm not going to dwell on it because this is updated so regularly that you need to go through to the link on the inner notes of this video. But there are different rates on ISAs and SIPs. That's the main point. Others to bear in mind that pay a pretty decent rate. Fidelity and also Hargreaves Lansdown aren't too bad. Now, if you're looking at something like free trade, so you're looking at trading, they do actually pay a pretty decent rate of return. They pay 5% interest at the moment on cash that's uninvested up to £3,000, that is. So it's not a free-for-all, but you do get some return on a limited amount of cash. Now, one thing to bear in mind, when we talk about the return on cash, that's what we're exactly talking about, not money market funds. So there are lots of platforms that don't give a return on any cash that's uninvested. Instead, they promote their money market funds. They aren't cash, they're cash-like. So it's not that. Now, one thing, we are in a world now, we're moving into 2024 and there's been a change in rules. Before I come on to that, the first thing I want to point out is that just because you have a platform, you don't have to stay with it. As you will probably have seen now, there's quite a range of differences in terms of costs and the things that you can do on different platforms. You can move your money, it is yours, so you can transfer your portfolio, if you've got an ISA portfolio, across to a new provider, or if you've got an existing portfolio, there's no reason why you can't open a stocks and shares ISA with another provider. Now, from April 2024, the rules have improved for consumers, so you can actually open more than one stocks and shares ISA in a tax year and contribute to them both. Now, why that's interesting is you may, for example, be a big fan of Vanguard and may have a portfolio of Vanguard funds with Vanguard Investor or Interactive Investor, but you decide that you might want to top up that portfolio, but at the same time you might think, I want to do a bit of trading, but I can't do that on Vanguard, or it's more cost effective than Interactive Investor if I use Trading 212, for example, or something very similar. So you could put some money into your ISA with Trading 212 to trade with, but also put some money in the same tax year into your portfolio that you've got with an existing provider or another one that you've just taken out. So there is this choice. Make sure that you use it. So do shop around. You can open up more than one. There are plenty of really good offers as well. I've mentioned cashback offers. That isn't a reason to take out a platform, but if you're thinking of taking one, do look out for them. We put a link in the notes of this video with a roundup of all the best offers that exist. They regularly change, new ones come, existing ones get pulled, so make sure you do check out that link. So that is it for the roundup of the best stocks and shares ISA. Which is the best? There isn't a definitive answer. You've got to take into account all of the factors that I've mentioned. You can probably tell by now there's not one definitive one. There's some that are incredibly popular, but if you go back 5 years, what was the most popular platform back then? Certainly isn't the most popular now. And the one thing I'd like to point out is that people can get bogged down with the range of choice when it comes to ISAs. But the most important thing is to invest. If you want to start investing and you've cleared your debts and you're in a position where you can start to put money away, there are so many good options. It's not like it was 5 or 10 years ago where there weren't options like they are available and it wasn't cost effective for anybody to invest. Now you can invest from as little as £1 and the charges have been driven down by competition. So do make sure you look at the research that we provide, the links, and you do make a choice and start investing. As I say, you can always change in the future. So if you found that useful, make sure you hit that like button, but also subscribe to our channel.